Hi there, Tricia here, and I wanted to go over the trades for the 22nd of January, which was Thursday, and I did not take any trades on Thursday, and I'll show you why. I actually did not trade in the afternoon that day, and nothing set up in the morning. But anyway, I used two trade setups, and you can check those out at www.easyemintrade.com. As I've said, definitely a conservative way to trade, but it does work well when you do get a trade set up, and it also takes the guesswork away from should you or shouldn't you enter a trade. So this is a trade that was you would think would be setting up at 11:56, 11:57, and the reason why I did not take this trade, it was kind of wishy-washy, and by wishy-washy I mean you've got divergence going up here with price going sideways, which would lead you to believe that the price is going to go up. And then here, right after, you have divergence here on the indicator with the price going up. So that's divergence as well. So you kind of really don't know what's going to happen. And so you have a short scalp setting up here, which normally in this environment, this would be great because you do have divergence here and here. But you notice this white trend line that I drew here. This is support, and I'm going to show you why I did not take this trade. And these are things that you'll get the feel for as you're looking at all the charts, the three charts at the same time. But the reason why I didn't take this short is if you look at the longer tick chart, this is the 22nd on the right, and this is the 21st on the left. If you look to the left, and these are trend lines that I drew myself. This is just a trend line that I drew, and the green, yellow, and orange lines are high, low, and close from the day before. So this white line I drew, you can see on the 21st we have some real support here, and so chances are the price is going to get held up in that same area. And you can do that as you're watching your trades set up. You can do that. You can just look at your longer tick chart or even your 60-minute chart and just see where to the left of where I am was there a hold up in price. And chances are really good that you're also going to get a hold up in price in that same similar area. So where I drew this red arrow is where the entry was setting up on our smaller tick chart. So you can see the two bars before that on this longer tick chart are getting held up right in that area that I had my support line drawn. So chances are that you're going to get a bounce from there and it's not going to go lower. So with the discrepancies here, with the divergence going in both different ways, within minutes of each other, I'm not going to take the trade because there's no clear indication which way that price is going to go. So you can see, like I said, when it hit this support line, which was from the price from the day before that I just showed you on the longer tick chart, it got stuck there and bounced. So these are just things that you will come to know when you're trading a little bit longer, and many of you already know all this, so this is no news to you. But always look to the left of where you're trading. And yeah, it's the day before, but that's still relevant because if you look on a 60-minute chart, those price supports and resistance are relevant. So if price action is in a spot where there is very strong support or very strong resistance, chances are that you are not going to break through that. And if you do, great. If you do break through that support or resistance from the day before or even earlier in the day, then just look to buy or sell the pullbacks. That is the safer way to take that trade because you can see if you entered short, you wouldn't have gone anywhere. So again, those are things that you need to be aware of. This is a trend change, and I wanted to show you this, and I know I've shown you before, but I just showed you the two tick charts in the morning. We're looking short. Now we're looking long, and the reason why I consider this a trend change, and everybody has their own idea, but what I do is I go from the high in the morning to the low in the morning, and you can barely see the blue lines, but what I did was I drew the white trend line at the 50% mark. So once we get past that 50% mark, that is now the change in trend. So you can see when you get to that 50% mark, there's a lot of consolidation back and forth here, above, below, and then finally we break out above. So at that point, as long as our longer tick chart prices are above both moving averages, then we're going to be looking long at that point. So we've got our trending indicator above 20, which is good. And as with all trades, we always want our trending indicator to be above 20. So if the trending indicator is not over 20, then we're not looking for any trades. So now we have a trend change. Then these are setups that were occurring in the afternoon. And I was not trading in the afternoon, but if I was, I'll show you why I would not have taken these. This was at 1359, 1358 in that time vicinity. And we have divergence going down and price going sideways. So that's a discrepancy. If we're going long, we don't want the divergence going down. We want it going up. So that would be a trade that I would pass on. The tick reading was still fine, but it's still not a high odds trade because you really don't know what's going to happen. So I would pass on that trade. It looks like it would have worked out for a couple points, and that would have been great. But again, you don't know these things until after the fact. And you can certainly take these plays and just keep your stops tighter. And if that's in your plan, then by all means, you can absolutely take those trades. But I'm just telling you the reasons why I would not have taken those trades. And, you know, I give you my rules and my criteria, but that does not mean that you can't change it to suit your personality and your style. So, you know, by all means, tweak it a little bit, do whatever you want, but put it in writing. Don't just make the rules up as you go along. At 1408, we had a long trade setting up, and you could have taken this, and chances are if I was here, I probably might have considered it. We have divergence, which we like, of course, price going sideways, indicator going higher. We've got our scalp trade setting up. The only thing that might have stopped me was that our tick reading was at very high extremes. It was over 1200. So usually when I get a tick reading between 800 and 1000, I'm usually a little bit more cautious because usually price is going to slow and then go in the opposite direction. Unless, of course, during that day, in that particular time frame, let's say, you know, from 1 to 2 o'clock, all the tick readings are extreme, so then it's irrelevant. But at that particular time, the tick reading was at 1200, plus 1200. So if you got in here at this vertical line here at a market order, you probably would have got filled somewhere over here. And just depending on how your market order got filled, you would have got stopped out for a 2-point loss, or you would have barely hung on by a quarter or a half. So it really would just depend on where you got filled, and you would have probably come out with you know, plus 1.5 to plus 2. It would not have been a very large gain. But I think if you got stopped out over here trail stopping, it probably would have been like a gain of 1.5. Again, depending on how you got filled. So if I was here, I probably would have taken that trade. But again, just would have depended on where you got filled in your market order, whether you were stopped out or, you know, just hung on by your teeth. So anyway, that's what happened on Thursday the 22nd and why I did not take any trades. So it's important to know when not to take trades as well, even though they could go on to work, but they're not high odds trades. So, you know, again, you still could have made a couple points in the afternoon. But again, no trades equals a non-losing day. So, you know, that's fine by me too. So anyway, no trades today, and you can go to www.easyminitrade.com and check those out.